Hello everyone and welcome to Crypto Partner Club. I am Mauro.terrinoni, former investment banker, and today we're analyzing Ethereum. By the end of this video, you'll get three things. Number one, why Ethereum crashed 60%. Number two, three bearish themes versus three bullish themes. And finally, three price scenarios for ETH price for the next 12 to 18 months. By the end of this video, you'll understand whether Ethereum is broken or just in transition. Let's dive in. Ethereum peaked at nearly $5,000 in August 2025. It was trading at around the same level, nearly $5,000, also in late 2021, if you remember. Now it's trading at around $2,200 and it was down to $1,800 only a few weeks ago in February 2026. That's a 60% crash. We are in the middle of a crypto winter. In my recent video on Bitcoin, I discussed some of the reasons that caused Bitcoin to drop 50%, and some of them are also applicable to Ethereum and any other cryptocurrency. High net yields, macroeconomic uncertainties, and correlation to stocks. However, Bitcoin dropped 50% and Ethereum lost more value, which is nearly 60%. So we need to understand the reasons why that was the case. The ETH-BTC ratio is currently at 0.03, which is very close to a multi-year low if you look at the last 10 years. And especially in the last 3-4 months, it's been declining noticeably. So institutional capital has favored Bitcoin over Ethereum. In fact, spot Bitcoin ETFs have raised 56 billion, while Ethereum ETFs have lost 11.7 billion. That's nearly a 5-to-1 ratio. And if this institutional capital was to flow in favor of Bitcoin, the relative value divergence may even push this ratio lower. The first reason is layer 2 cannibalization. So the intuition of the Ethereum founders was that for blockchain to grow faster, there had to be a simpler way for new projects to be launched relying on layer 1 infrastructure called layer 2. And those projects were launched in around 2020, and there are now about 100 of those. And the problem is that layer 2 projects charge a much lower fee to users than what Ethereum charges, in the region of 10 cents on the dollar for layer 2 projects versus $5-10 or more for the Ethereum layer 1, which is called mainnet. And therefore, layer 2 projects eat up income from the main Ethereum infrastructure. So for example, the average transaction across Ethereum has declined noticeably because the proportion of layer 2 projects is much higher than the transaction happening on the mainnet Ethereum. And this is a problem because obviously it subtracts, fee income that contributes to Ethereum holders. The second issue is linked to Vitalik Buterin, one of the founders of Ethereum and probably the most visible personality for Ethereum. And Vitalik Buterin has announced a plan to divest some of his personal ETH holdings to fund development projects and some charity initiatives. And this has increased in the short-term pressure on Ethereum. And despite being a commendable purpose, because he's interested in decentralized technology, in the big vision of crypto, in traditional finance, which is, as you know, my background, we look at founders that pursue growth plans for their companies that ultimately result in investors earning money rather than big picture and other purposes driven by other nature. And the reason number 3 is that ETH validators are declining. There's a process called staking, which is basically a way that ETH holders can stake and pledge their coins. And so they basically pledge not to sell them in exchange for earning a yield, which is about 3%. And this process helps with the security of Ethereum. And it's important because it's an indicator of the confidence of ETH holders into the appreciation of the currency. And also, by taking away a percentage of the coins from the circulation, it contributes to push up the price because of scarcity value. Well, for the first time, the number of ETH validators has declined and dropped below 1 million in August 2025. And this is important because it shows lower confidence in ETH appreciation. And although the total number of coins staked is around 30%, that is broadly unchanged. If that was to reverse with more coins on the market because they are not pledged, that could increase basically the supply of ETH and therefore lower the price, and will be also a signal of more people selling. Now, let's look at the fundamental value of Ethereum. As you know, at Crypto Partner Club, we are not caught into short-term signal trading. We're more looking at the fundamental value of digital assets and try to see if there are catalysts for the value appreciation. And so if Bitcoin is generally considered as a digital gold or store of value, Ethereum is essentially a programmable infrastructure where you can build decentralized finance applications, tokenize real-world assets, and basically use it as a basis to launch new layer 2 projects. And all developers that build financial applications on top of Ethereum, they pay fees to Ethereum that ultimately benefit ETH holders. Currently, Ethereum hosts 57 out of 99.6 billion of DeFi total value locked. That's basically 59% of all decentralized finance. In addition, Ethereum hosts 51% of all stablecoins market caps and 57% of all real-world assets tokenized. This means that Ethereum is essentially the most important application for decentralized finance. And so to understand whether there's a catalyst in value for Ethereum, we need to take a view on whether decentralized finance will grow and whether Ethereum will be able to retain fee income or whether it will mostly lose it in favor of layer 2 projects and only retain residuals of it. Let me now give you the bear case for Ethereum. 3 specific structural reasons. Number 1, layer 2 cannibalization. The risk here is that the average transaction fee, which is already only 20 cents on the dollar, is driven even further down by the dominance of layer 2 projects. And that may cause the overall fee income for Ethereum to collapse further as all the values is shifted from the mainnet to layer 2 projects. Bearish theme number 2, competing layer 1s emerge. Solana, Avalanche, Polygon, and a number of other projects are competing with Ethereum, trying to grab their share of tokenized world assets and decentralized applications. Some years ago, Ethereum had 90% of all DeFi total value locked. This number has declined. If it goes to 30-40%, Ethereum loses its dominance and therefore its network advantage. And bearish theme number 3 is that institutional capital keeps flowing in favor of Bitcoin. Remember the 5-to-1 ratio of spot Bitcoin ETFs against spot Ethereum ETFs. In general, Bitcoin is perceived as easier story, Ethereum as the stake component, the layer 2, so it's not as easily understood, and therefore Bitcoin could be seen as a more direct recipient of institutional funds as they grow compared to Ethereum. Let me now give you the bull case for Ethereum. 3 specific reasons that could cause ETH price to jump massively in the next few months. Number 1, explosion of tokenization of real-world assets. We have seen that Ethereum controls 57% of tokenization of real-world assets. Those include equities, bonds, real estate, commodities. If financial institutions were to start tokenizing even a small percentage of global assets, that could bring massive value to the whole tokenization business. And Ethereum, being the largest player, would have a massive fee jump from this business. Bullish theme number 2 is institutional capital that flows massively against Ethereum. This could be, for example, on the back of growth of DeFi, convergence with TradFi, with traditional finance, or explosion of the RWA markets. And let's not forget that spot Ethereum ETFs also have the benefit of the yield that Ethereum earns when staking the coins. So compared to Bitcoin ETFs where there is no income, there may be a different product that may basically be of interest to some of the investors. And the number 3 bullish theme is the stabilization of the economics of layer 2 projects. We have seen that at the moment, layer 2 projects charge much lower fees compared to Ethereum mainnet. And the reasons why they're able to do that is because they batch transactions and then they settle them on Ethereum. But it may be possible that at some point, the expansion of the number of layer 2 projects and the fact that we have reached the lower end of the transaction fees may cause the declining fee income for Ethereum to reverse and start actually increasing. Let me now give you 3 price scenarios for Ethereum for the next 12 to 18 months. First, downside case. Ethereum trades between $1,500 and $2,000. This case assumes the layer 2 projects keep cannibalizing mainnet revenues, that yield for staking drops below 2%, more people unstake, and therefore more coins are left into the market and keep dragging down the value of Ethereum. Second scenario, Ethereum trades between $2,000 and $3,000. This case assumes essentially that the increase in layer 2 economics offset the decrease in average Ethereum fee income, that Ethereum keeps its market share in DeFi finance, and that there is a modest growth in overall tokenization of real-world assets and DeFi finance. Now, upside scenario, Ethereum trades between $3,000 and $5,000. This case assumes there is a sharp growth in tokenization of real-world assets and the whole DeFi finance, and Ethereum keeps its dominance of this booming new sector. Institutional capital flows against Ethereum, pushing up the price of the coin. So here is my verdict about Ethereum. Ethereum is not broken, it's in transition. In traditional finance, you will see Ethereum more of a value play rather than a momentum play. And this means if you believe in the growth of DeFi finance, of tokenized world assets, you believe Ethereum will profit from this growth, especially if it keeps its dominance as a key technology for DeFi finance. However, in traditional finance, what is also very important is how capable is the management to benefit from those opportunities and basically transform those opportunities in real value for the coin and for the investors in Ethereum. However, the layer 2 economics is currently a concern. It may be possible that the growth of layer 2 projects and the fee income that they earn could result in increased fee income for Ethereum on a stabilized average Ethereum fee income level. But really, it's about the details. It's about how the timing will unravel. So we'll have to watch and see. So I'm basically watching three key elements for Ethereum in terms of data. The number one is the growth of tokenized world assets. The number two is Ethereum market share of total value locked. And number three is settlement economics for layer 2 projects. Quick disclaimer, this video is not meant for financial advice, but for informational purposes. If you need financial advice, you should talk to a qualified financial advisor. And remember that when investing, capital is at risk. If you found this analysis helpful, hit subscribe. I post weekly meetings on crypto assets analyzed from the lenses of traditional finance. No hype, no paid promotions, just fundamentals. Please drop a comment with your view and see you in the next video. Goodbye.